Hi, this is Clement from Stocks University. In this video, I want to quickly go over the top 5 mistakes I've seen people make in the investing world so you can avoid them. First of all, if you are not investing, this is your worst mistake. Yes, investing has risk, and yes, you will lose some money on investments. We all do. However, staying out of the market means that you won't be able to take advantage of money-making opportunities, discover the power of compound interest, or achieve long-term financial goals. The other side of that is investing too much. Before putting a dime in the stock market, you should have at least 6 months of expenses set aside for any emergencies. The stock market goes up and down, and being able to ride out recessions without cashing out when the market is at its lowest is crucial to your success. A sign that you are investing too much is emotional strain. If you have trouble sleeping at night because of the risk involved in investing, or you are fighting with a significant other or family over your investments, it may be time to reevaluate your amount invested. The second mistake is investing in the companies you and your friends casually talk about at the bar or a night out. We all have this one friend who's not in finance or in stocks, but always has some kind of insight about the market. His sentences often start with a "trust me," and really, you shouldn't. Now, friends are great for sharing investment ideas, but you should always be ready to do your own research and never invest solely on advice from an overconfident friend. To successfully invest and balance risk and reward, you have to set an investment goal. You need to understand why you are investing. Do you have some spare cash and want to keep up with inflation? Do you want to set money aside for your son's college in 10 years? Or are you a retiree looking to preserve your capital while receiving an income? Answering the "why am I investing" question is crucial in order for you to tailor an investing strategy to achieve your goal. Choosing the right assets and setting up your investment timeframes are key to successful investing. If you go on enough financial websites, you'll come across someone promising you that he has identified the next Apple, or a company saying that they can triple your money in a month with one good investment. The saying goes that if it looks too good to be true, it probably is. I know that some will be thinking, "I'm not stupid, I'll never fall for that," but these schemes continue to exist because some people actually do fall for them. Our last mistake is panicking. You should never ever panic. Never act out of fear. This never ends well. If you are missing out on a stock that has soared and left you behind, don't panic and open a position just to get a piece of the action. You'll most likely end up losing money. On the contrary, if you initiated a position and that took a turn for the worst and you lost some money, don't panic sell. You'll most likely sell at the lowest and miss out on a potential recovery. Always evaluate stocks as calmly and rationally as possible. It's easier said than done, but practice makes perfect, and you'll get there. Understand what has changed and why the stock is soaring or tanking, how it fits into your initial research, and only then act on the new information. To sum everything up, there are a lot of pitfalls for a new investor, and every mistake you make will cost you money. Hopefully, this video will help you minimize the mistake you make while first dipping your toes in the investing world. I hope you enjoyed this video, and I'll see you in the next one.